Hello and welcome to day 5 of the Financial Empowerment series. Today is a very important day. Today we are going to be talking about your spending plan. You will get the opportunity to create your own customized spending plan. But before we begin to take our deep dive into the spending plan, there's a couple of tips that I'd like to give you. First off, when creating your spending plan, until you get to the point where you've created enough reserves for yourself, you want to base your spending plan on your pay period. So a tip that I like to give you is to create what I call a bill payment calendar, where you would list when your bills are due on that particular calendar. And what you want to do is, let's say for instance that you get paid twice a month, the 15th and the 30th. And let's say that you have a bill that is due on the 27th. You want to schedule that payment with your check that you get on the 15th. Because part of setting up a spending plan is all bills are going to be paid on time, okay? Before time, at the maximum on time, okay? So even though you're going to be getting a check on the 30th, that bill is due on the 27th. So your check from the 15th will cover that particular bill, okay? And we're not going to have any line items on your spending plan for late fees, okay? So that's one tip I'd like to give you with that. And then what you're going to do is your goals that you set up. Remember on day earlier today, we talked about setting up your SMART goals. So your SMART goals are also going to be part of your spending plan. So in getting ready to set up your spending plan, I want you to go back. And there was an exercise that you did where you had to list all of your monthly expenses. You're actually going to use that exercise to help you set up your spending plan. So you're going to go back, review what you have on as your expenses, and that's the beginning of your spending plan. Now, when you did that exercise, some of you may have been in a deficit, meaning that you had more bills than you had money to cover at the end of the month. Okay, now let's say that is your case. If that is your case, what I need you to do before we begin to set up the spending plan is I need you to make sure that you go back and look at those expenses and see where can you make some changes? Where can you make some cuts? Remember where we talked about your fixed expenses and your variable expenses. It's hard for you to make changes with the fixed expenses like your rent, your mortgage payment, things of that nature, your car note. But look at your variable expenses, your groceries, gym memberships, entertainment, eating out, those type of things that you had as expenses, and look and see where you can make some cuts there that will help you to balance out your budget, okay? So you need to do that first. And sometimes just making cuts is not enough. You may be able to make some, but it still doesn't give you the balancing difference that you need to create. In some cases, it is very necessary for you to increase your income in order to balance that budget. So you may have to get a second job, or perhaps think of creative ways to increase your income. Maybe you like to bake, and maybe on the side you can bake, or whatever some of your passions are. Be creative and use that as a way to increase your income. Okay, so do that first, and then once you do that, get your expenses balanced. Then you're ready to begin actually setting up your spending plan. Okay, now for those of you who had you were in the positive, meaning you had enough of income coming in to cover all of your expenses, and you probably had money left over. But when we set up your spending plan, what we're going to do what I call zero-based budgeting, which means that every dollar is going to have an assignment. So even if you have money left over at the end of the month, we're going to take that money and we're going to do something with it. Okay. So now that you've gone back and you've gotten the opportunity to review your expenses, make any changes that are necessary if you needed to balance it, we are ready to set up your customized spending plan. Okay, so you can do this on the computer, or you can do this on just a sheet of paper if you like, if it's easy for you to manage your budget that way as well. Okay. So for your spending plan, I want you to go back and think about when we discussed the 70-30% rule, okay, in terms of your expense allocation. So 30% for pay yourself first and 70% for living off of, okay. Now, when I talked about the 30%, it was divided into 3 segments: saving, investing, and charity. And I said that if you're not giving the charity, then, it was 10% for each one of those. However, if you're not giving to charity, then it would be 15 and 15. 15 for savings and 15 for investing. Now, let me just take that a step further when we're setting up this plan. It is my recommendation that you have at least $1,000 saved in your emergency fund, because as part of the spending plan that we're setting up, we're going to have a debt repayment plan as part of that. And as part of debt repayment, we are not going to be creating any new additional debt. So that means when an emergency comes up, we're not pulling out the credit cards to take care of the emergency. You're going to go to your emergency fund to take care of that emergency. Okay. Now, I do realize that sometimes emergencies come up that are more than $1,000. Yes, I know that that definitely happens. So in that event, then I want you to really strategize relative to that emergency. Take a portion of your emergency fund. I don't want you to totally exhaust your emergency fund. Take a portion of your emergency fund, and then you may have to put a portion of it on your credit card. But when you place that on your credit card, you're going to put it on your credit card with the mindset of you're going to aggressively pay that money off. Okay, it was an emergency. You had no other choice but to put some of the balance on your credit card. All right, so you want to totally fund your emergency fund first. That is going to be priority. So all 30% of your pay yourself first in the beginning will be going to your emergency fund unless you already have your $1,000 emergency fund. Okay, hopefully everyone understands that. Okay, now, so we've set the beginning part of your spending plan will be your 30%. You'll have your income, and then you'll have your 30% pay yourself first. And then now we're going to break down the 70% that you're going to be living off of. So there on your spending plan, you'll have your rent or your mortgage, your food. You're going to set a budget for your food. You're going to have your utilities, your car note if you have one, what you have to spend on gas. So everything that you listed under your expenses is going to be under that 70%. Okay, we've already balanced it out. I told you to go back and balance it out, so everything should equal out at this point. So you're going to list all of your expenses. Okay, now some of the things that you spend your money on relative to your life would be entertainment, eating out, maybe you buy people gifts if you like to travel. My recommendation is that those type of things need to be a line item on your spending plan. Okay, so let's talk about a vacation, for instance. If you already know that you take a vacation every July, then you want to start saving for that vacation. You don't want to put that vacation on your credit card, okay? So let's say, for instance, that just for simplicity purposes, that the vacation is going to cost $1,200 when you go, okay? And so that would mean that every month you would need to save $100 a month, so that when that year goes by, you'll have your $1,200 to take your vacation. So you'll have a vacation fund on your spending plan. Okay, now let's talk about gifts, because a lot of us during the holidays, birthdays, things like that, we like to buy gifts for people. Okay, let's talk about the big gift giving time, which is the Christmas holiday. Okay, so what I would recommend that you do, and this all should be done on the annual basis where you set these budgets up, okay? And so what you're going to do is you write down a list of everyone that you know you're going to have to buy a gift for, okay? And then once you write their name down, what you're going to do is you're going to place a dollar amount next to their name, okay? So that's how much you're going to spend on that particular person. Include everyone that you normally buy, your family, your friends, co-workers, you know, all should be on your list with the dollar amount assigned to them. Okay, so once you get all of your dollar amounts listed, you're going to add all that up, and then you're going to take that number and you're going to divide it by 12. Now, I do realize, depending on when you're watching this video, that we could be 5-6 months into the year. So if you only have a few months before you have to make the purchase, then that's the number that you're going to be dividing by. But for the purposes of this tutorial, we're talking about a 12-month period that you have to save. So this year, you may only have a few months, but the following year, now that you know to do better, you'll have 12 months to plan, okay? So we're going to work with 12 months for right now. So you take your number that you've added up, your total that you've added up, divide it by 12, and that's going to tell you how much money you need to save every month in your fund in order to have the money to buy these gifts. It's another way to avoid you using your credit card at gift giving season, okay? And you would do this same thing for birthdays, okay? Anyone that you want to give birthday presents for, list them down. When is their birthday, how much you're going to spend on them, and then you have your birthday fund set up as well, okay? So just about anything that you want to do, you can set that up as a line item on your spending plan, okay? So with that in mind, if you have a car, because a car is another area where we find ourselves spending money for repairs, you know, oil changes, new tires, things like that. So you should always have a line item in your spending plan for car repairs, and it would include those items that I just talked about. And then that way, when it's time to get your oil changed or your brakes changed and things like that, you've already saved up money to be able to pay for those things. Do you see a pattern here? We're setting up these saving patterns so that you do not have to use your credit card to take care of them. It's all about planning. Okay. Now, I do realize that I am speaking from a position that you have enough money coming in to be able to fund all of these things that I'm talking about. Some people may, and then some people may not. So you may not have these items on your spending plan. So, but from a planning perspective, so you may not be able to put a travel fund on your spending plan. You may not be able to put a gift fund on your spending plan. But if you have a car, I do recommend that you definitely put a line item for saving for your car. Now, these funds that I'm talking about, these are below the line. These are below the third, not that they're not in the pay yourself first saving category. We're treating them as an expense. Okay, so they're actually part of the 70%. Okay, and so you'll have that as a line item as part of your 70%, giving all of your dollars an assignment. Okay, now the more dollars overage that you have, the more things you can assign to those dollars. Okay, so just want to make sure that you guys understand how you're going to set up your various fundings on your as part of your 70%. Now, we talked about SMART goals. Okay, so if you had any SMART goals that you wanted to reach, let's say, for instance, maybe saving up for a child's college. Okay, so you want to make sure that that's also included in your spending plan. Any SMART goals that you set for yourself, maybe you wanted to pay off a certain credit card or something like that. We are going to talk about a little bit later with the debt management. Well, actually, I can talk about it now. You want to have a debt repayment plan as part of your spending plan. So what I recommend is, let's say, whatever is your lowest debt that you have, and remember we did an exercise where you had to list all of your debts. So if you had a mortgage, credit cards, student loans, I want you to go back and look at that list of all of your liabilities, all of your debt. And I want you to choose whichever is the smallest, whichever one has the smallest balance, okay? And whichever one has the smallest balance, what you want to do is whatever your minimum payment is, you want to throw in a little bit extra to that minimum payment, okay? And so, you want that extra that you're going to be applying to that particular debt. You're going to label that on your spending plan as a debt snowball payment. Okay, so your debt snowball payment. So let's say, for instance, that your minimum payment on a particular credit card is $25 and you want to send them an extra $25. So on your spending plan, you're going to have debt snowball payment of $25. And so now you're going to be sending this particular credit card every month $50 instead of the $25. Okay, now the way that works is once you pay that credit card off, okay, once you pay that off, you're then going to take that $50 and apply it to your next lowest balance. Okay, and then so let's say the minimum payment on that particular card was $50. So now you're going to continue to give them the $50, but now you're going to add that other $50 that you were paying on the credit card that you paid off, giving them a total of $100. And that is where the snowball effects occurs. And you do that for every bill. After you begin to pay them off, you apply those other payments to the bill, and before you know it, you will be debt free. Okay, it doesn't take that long, because as the snowball gets to rolling, the amounts that you can apply to the other bills gets larger and larger, therefore speeding up the payoff process with the remaining balances that you have. Okay, so you're incorporating that into your spending plan. So you can be very creative, and once you get the hang of this and just realizing that it really just comes down to planning and paying attention to what you have to do with your money, which is why I don't like to call it a budget but a spending plan, because I don't like to limit my clients in terms of what they can use their money for. That's why I don't like to call it a budget. When you come in and you visit me, you're going to tell me everything that you spend your money on, and we're going to put it all on your spending plan. Now if your spending plan comes out negative and we need to balance it, then we're going to examine what can we take off so that we can balance your spending plan or balance your budget. Or what can we decrease? Can you get it for cheaper or something to that nature? So you can begin to be creative in terms of what you want to list on your spending plan. The main purpose of a spending plan is to get you to pay attention of what you have coming in for income and what you have going out for expenses, and to get you to save and invest some of your money. Because ultimately, once you begin to pay attention to what you're doing with your income, that is essentially how you are going to be able to start leveraging your income to build wealth. And generally with a spending plan, like we talked about the debt reduction plan of your spending plan, once you begin to pay off debt, you will notice that your cash flow will increase. And that increased cash flow is what you're ultimately going to use to begin to build wealth. So say for instance, after you've paid down your debt and now you've got an extra $2,000 at the end of every month, what are you going to do with that $2,000? What type of things do you like to invest in? Me personally, I like to purchase real estate. I have income property. Okay, and so that's another way of generating income for me. What do you want to do with your extra $2,000? Do you want to buy real estate? Do you want to invest in the market? Do you want to start a business? You know, there are several things, and these are the things that help you begin to build wealth. But oftentimes, because people simply are not paying attention to what is happening with their money, they don't get the opportunity to leverage it and begin to build wealth. You are truly going to be amazed that once you begin to start writing this down, be it on a piece of paper or on the computer, you're going to say to yourself, man, I can't believe how much money I was wasting that I was not leveraging. You're going to see that once you begin to start paying attention. And I want you to report that back to me. I want you to email me at angelamitchell@debtnotallowed.com when you have that epiphany, when you see that in your spending plan that you wish you had started doing this 5-10 years ago. Okay, I want to hear about it. I want your feedback. And so that is your spending plan. Now, what I'm going to do on day 6 is we're going to talk about some tools that are going to help you stay on track with your spending plan. I'm also going to give you some tips, because I know with some of you, you probably had the challenge of your expenses didn't balance, so you needed to go back and either take some things out, see if you can make some cuts. I'm going to give you a couple of tips in some areas where you can probably find some savings in your variable expenses that will also help you balance out that spending plan. Okay, so I hope you guys, I want you to have an assignment. It's going to take you a little bit to put together your customized spending plan. I want you to work on that, and then we'll come back tomorrow and I'll give you some helpful tools. I'll see you tomorrow.